It's Tuesday morning, November 24th, and we're about 2.5 hours into trading. Hello, traders. We've got a nice market rally going today. Joe Biden, president-elect, has selected Janet Yellen as his Treasury Secretary. The market likes that news. Janet Yellen has proven when she was the Fed chairman that she's very dovish. The market loves easy money. I believe that's one of the reasons that the market is moving higher. Also, some of the uncertainty has been removed. We've got seasonal strength working in our favor. Lots of great coronavirus vaccines hitting the market. All of this is good news. And right now, buyers are engaged. So we see a nice drift higher. Let's go and take a look at the market. I'm going to draw a upward sloping trend line right here, but you can see it's already been breached to the downside. Here's what I see happening while I do this video. Really nice, steady price action. This is a sign of heavy buying. And I believe that right now we're seeing a seller's boycott. What the heck does that mean? That means that there's not a lot of profit taking going on. Right now, asset managers want to be long. They see that the market momentum favors the upside, so they're relatively passive. Any buying that's taking place is simply lifting those offers. Now, the market has a 1OP indicator that's extended right here, which tells me that there could be a dip coming. So after a nice run like this, it would be very prudent to take your gains on stocks that you're day trading. Okay, but I don't know that I would want to short this because the move has been so strong. I believe that if we do get a market dip and we do pull back, that will set up an even better buying opportunity. Let's go into the D1 chart. So let me just emphasize that point one more time. When you get a really strong market move like this, you can see the green candles. Every little attempt at a dip was immediately gobbled up. When you see strength like this, don't try and get cute. Don't try and short this rally and pick tops. Your best play will be to take profits on your longs, go to the sidelines for a little bit, see if that market drop materializes, and when it does, and you get that pullback, you'll also see the 1OP indicator fall, and then you'll get a bullish cross down here. That is going to set you up for excellent trades on the long side. You want to be trading from the long side. The only exception that I'll mention to this is if we get some type of really big blow-off rally with long green candles closing on their high. Typically, a rally like this with this type of strength, you're going to see eventually a sideways trading range, and then eventually toward the very end of the day, it might leak a little bit of oil. But I wouldn't try and get aggressive with any shorts in here. This looks way too strong. Let's go into the daily chart and see what we've got going on as well. Here you can see a little bit of a cup and handle formation, trying to get through that all-time high. Look how close we are to it. I believe 364 is approximately the all-time high. This looks good. This is encouraging. Got a nice little upward sloping trend line right here. Click GTC, click on that bar. Let's click on this bar right here. There's your upward sloping trend line. As long as this is intact, everything's good. Now we have seen a rotation out of tech stocks, and you can see that in today's price action. Look, QQQ, nowhere near the high. QQQ barely off the deck today, even though the S&P 500 is rallying. Now this is because we've got a rotation out of mega cap tech stocks. They were considered kind of a flight to quality, flight to safety, stay at home play. But right now we're seeing a lot of the cyclicals gain some traction. Those would be your hotels, restaurants, airlines, stocks of that nature. So that is what's being bought, and that is keeping a lid on the tech sector right now. So let's go in and see if we can find some good trades. Roku is one that I showed you in my last video on Monday. I also showed you that stock's done well. I believe I also highlighted NUAN. There were quite a few others, so these stocks have all done well. We'll take a look at what we've got going here on the bullish side of the ledger. And let's do an exercise here. I'm going to go into heavy buying, which is one of my favorite searches to use. And you can see how extensive this list is. In fact, if I took off this filter at the top, Look at all these candidates. Incredible. Now let's go to the bearish counterpart. Heavy selling. That's it. Hardly any. The system by nature is telling you which side of the market you should be favoring. You should be favoring the long side. Incidentally, I'm not going to spend a lot of time on this, but you can see where the weakness is concentrated. GLD and precious metals, SLV, are getting hit hard. This is a really nice downward sloping trend line right here. You can see horizontal support that came across around that 174 level. Yesterday we closed below it. Look at this. We are down on that 200-day moving average. If gold breaks below the 200-day moving average, it could really start to pick up some steam on the downside. Let's zoom out very quickly and see where it might find that resting point. First resting point I see is probably around that 162 level. So gold, very, very weak right here. Getting to be a little bit of a selling climax, in my opinion. What does that mean? Well, if you can see a downward sloping channel here if you connect these lows right here. Let's do it. I always like to do some technical analysis. I want to make sure that everybody is learning and not just following the trades that I highlight blindly. So you've got that's the lower end of that trading channel, and then you've got the upper end of the trading channel probably coming in a little bit like this. It's not perfect, but it's good enough. And so what happens is when you've got a trading channel like this and you see the lower end breached and we're down on that 200-day moving average, typically this is a selling climax when you break the lower end of the trading channel or the upper end of the trading channel. So there's a good chance that gold will bounce in here off that 200-day moving average and try and get back into that trading channel. But overall, this longer term trend is not encouraging for gold bulls. So that's it on the bearish side. Don't really want to spend any time there because I'm not bearish. I'm bullish. I am neutral to slightly bullish going into year end. You know that I am because I've been telling you that in all of my videos. We are going to click through maybe the top 15 charts here and we're going to see if there's anything that strikes our fancy. Tesla, obviously, you know, you've heard me talk about this in my previous videos. It's going to be added to the S&P 500. You can see the breakout right there to a new all-time high, approaching a $1 trillion market cap. Pretty impressive. Boeing, starting to gain some traction. Beautiful horizontal breakout right here. I like this price action. You can see how it's trying to get through this long candle right here. It looks pretty good to me. We'll zoom out, see what the really longer term picture looks like. There is a resistance level right there. What do I do with this information? I click GTC and I double click on that candle. Whoops, I clicked on the wrong one, but this will be good enough. It's a little bit closer. Yes, when it breaks out above that, I think there are going to be some really good opportunities on the long side for this stock. FDX. You can see here, we'll go to the regular chart. That would be a new closing high for the stock. Pulls back a little bit after a beautiful run right in here. Little cup and handle there, getting through this resistance level. I like FDX. Let's see what we can do. Maybe down around that 280 price point. Stock's at 294, so we got to go pretty close to the money to be able to get a trade like this done. I'm going to spend a little bit of time on another stock too. And I'm going to tell you a little bit about legging out of spreads that are not working out. There's a lot of risk involved in it. So we're going to take a look and we'll go into all strikes here so that we can capture the 280 puts and click on the 280s and click on the 270 750s. That puts us right about in here. And going 2 weeks out, you can see that they are 26 cents bid offered at 51 on that spread. 38's the midpoint. I really need to get 50 cents on that, so not going to work for me. Let's see if we go out another week on that. Maybe we'll be able to capture the premium we need. We'll go out to December 11th, and we're going to go to that 280 strike one more time. 280, 277.50. And there you can see that that spread is 16 cents bid, offered at 78. The midpoint is 47 cents. Get a little bit of a market pullback. You can see market is pulling back a little bit. You might be able to get your 50 cents for that spread. So let's recap. That's the December 11, 280 put, selling that, buying the 277.50, doing that for a 50-cent credit. I like that spread. FDX has done very well. They should do extremely well heading into the holiday season with lots of shipping going on. The spread expires December 11th, well before Christmas. I think that's a nice play. So that's the option trade that I'm going to show you today, but I'm going to continue to click through charts and I'm going to show you stocks I like and ones that I don't like. GS, Goldman Sachs, beautiful breakout here. Nice follow through. Stocks on its high of the day. Looks good. PLAN, nice breakout on the upside. JPM, banks doing well right now. You can see this horizontal breakout here, compresses again here through that horizontal resistance right here. If you bought this stock, you want to use that as your stop right there, which coincides with the open today. Banks are strong. I'm not a huge fan of banks. They seem to chop around a lot. They don't have a lot of momentum typically. RCL, nice breakout here, holds the gains. Now we've got another nice little breakout. If you're a pure technical trader, you don't pay attention to fundamentals. You don't care if there are a lot of people that are going to be in cruises or what the viability of the industry is. You simply trade off the charts. I've missed a lot of opportunities. SPG was a stock that I was looking at 2 days ago. And I was like, gosh, I just don't believe in the mall model anymore. The brick and mortar retail, it scares me. But if I take a look at the stock and just go by the technicals, which I do most of the time, you can see that breakout was nice, and look at that traction. That would have been a really good entry point. So sometimes if you're just a technical trader, you got to plug your nose and just buy it and ignore the fundamentals. So we're going to continue to go down. But by the same token, if the stock breaks those technical support levels, you have to be out. It's a very pure way of trading. You don't second guess that, yes, this stock is going to be great. This is a good value now all of a sudden. You don't get into that. If you're trading technicals, trade technicals. So we've got PayPal actually pretty good here. I'm not seeing anything that really entices me on that one. Disney, nice breakout right here. You can see these are all the laggards. CVX, energy stock. There's SPG, IBM. IBM above this horizontal support now. You can see how it dipped below it. Now it's starting to fill in this gap right here. It's above the major moving averages. Maybe it has some legs for another day or two. I just don't like this choppy action in here. BE, beautiful breakout right there. New high, that's good. VLO, refiner, energy stock, getting through this resistance level here. I like it. I like VLO actually. I like it quite a bit. HD, trying to get through that 100-day moving average right there. And let's see if we can pick up a couple more here. McDonald's, if it can get through that 50-day moving average, it's through this horizontal resistance. We've got a gap higher today. Then I think I would like it. Click GTC, double click on the high of the day. There's my alert line. After today, it'll be horizontal. So that also looks pretty good. Microsoft, chopping around, not doing a whole lot. So out of the candidates that I showed you, I really like FDX. I think BA could actually do quite well here also. I like the longer term chart on it. Where could you set something up on BA? I'd have to go below the 200-day moving average on it. But, truth be told, I got long BA in here and I had to hang on to it for a few days to be able to make my money on it. It has been very choppy, very newsy in the past, so it's a little bit of a tough play right now, but I think that if you can sell some longer term bullish put spreads down below that $190 level right in here, that's a good play. So for you very long-term traders, we'll take a look and see what we can get on that. We'll go into the December 18 normal expiration cycle first, and we'll go down to the 190, 187.50, see what we've got there. And On that spread, I need to get 50 cents. Nowhere close. 19 bid, offered at 32. I think we might even have to go out to January for this one, which may span earnings. So that would be a little bit of a dangerous play. We'll take a look at the date here. The earnings date was October 28th. So should have time for the January expiration, I believe. And we'll take a look just for the heck of it to see where those options might be trading. So this would be January normal expiration that I'll be looking at. And we'll go right here to January 15, and we're going down to the 190 strike. And there we got a 5-point spread between the strike prices. That's all that's available. 85 cents bid, offered at $1.15, a dollar right in the middle. I would need to get a dollar for that spread. I like that spread though. It brings us all the way down to this horizontal resistance level. Now it's support. And the premise behind this, as far as I'm concerned, would be, do I think that the worst is over for Boeing? And the answer to that, in my opinion, is yes. I feel that all the lawsuits and the grounding of their planes and the distressed airline industry, there's some possible bailout money that airlines might be able to get when the stimulus bill is passed. I also think that there's been a lot of passenger travel right now during Thanksgiving. That will also be good. I believe that the vaccines are going to help get our economy back on track, especially by January and February. People should be getting their vaccinations by then, and we should be seeing the light at the end of the tunnel for all this coronavirus. So, under that premise, technical and fundamental, longer term trade, January 25th, January expiration would be a 25% return on that bullish put spread, selling that January monthly expiration 190 put, buying to 185 for a $1 credit. Tonight I'm going to be doing my video for my members, my weekly swing trading video, in hopes of trying to get some bullish put spreads off tomorrow. And I'm going to be releasing that probably about 3 hours after the open, so watch for that. Normally I would release that a couple of days later, but my members should have an ample opportunity to get into the trades in the first 3 hours of trading tomorrow, so watch for that. I'd like to wish all of you a very happy Thanksgiving, because this may be the last recording that I do this week. Thanks again. If you like the content, please give it a thumbs up. Make sure to subscribe to my YouTube channel, because each one of these videos has a really good trade idea in it. Thank you. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.